Understanding financial reports is detrimental to any small business. I'm going to walk you through learning to analyze, interpret, and understand these financial reports. The first one we're going to talk about is the profit and loss. Now, before I jump in and show you a profit and loss, I wanted to let you know that your profit and loss is probably going to look a bit different than the example that I'm about to show you. The example I'm going to show you is a construction company who sells both services and materials. So they're going to have both those type of items on the profit and loss. Your profit and loss, however, may look very different. But just keep in mind that your profit and loss, just because it looks different, there's nothing wrong with it. However, you set up the business and your chart of accounts is what is going to reflect on a profit and loss statement. So let's go ahead and I'm going to show you a sample company here for Rock Castle Construction. On a profit and loss, a couple things I want to point out. First of all, a profit and loss can be performed for a time frame. It can be done for a week, a month, a year, a quarter. Your chart of accounts may look very different than the example that I am showing you here. In this example, I chose it because it gives you a lot of extra pieces of information. In a profit and loss statement, the first portion of the report is all about your income. Now, this is your gross income before you have any expenses coming out. So, first of all, you would list all of your income. Now, in this example with Rock Castle Construction, we see that they have an income category for things such as return check charges. So, in other words, when their payment bounces and is not cleared by the bank and you get charged, you in turn, or Rock Castle Construction in turn, will charge their customer with an additional fee to cover that charge. That additional fee would be an income. So that would be listed as the returned check charges income. Under that, they have additional incomes, whether it's construction income is the subcategory, but the category. But under the category, they have the subcategories, like what kind of construction income. So we have designing income, we have the labor income, materials, and subcontracted labor income. So these are all different types of income. Now, remember, your business may not have all these different types. You may not want to see all those different types. Perhaps you like a smaller, more condensed profit and loss, and you only want to see all of your income as one line item. There's nothing wrong with that. You can go ahead and when you create your chart of accounts, make it just one line. Then when you look at your profit and loss, it will be a much shorter area here in the income. After you have listed all your regular income, you can have other categories of income. Like, for example, here in our profit and loss sample, we have three different types of income. We have the return checks, we have the construction income, and then we also have the reimbursement income. Right here, this amount here is all just income, solid income, nothing has been taken out. That is the very first section of a profit and loss. The next part of underneath the total income is a section called the cost of goods. Now, the cost of goods typically is, in my years of experience in working with many different companies and different types of companies, sometimes the cost of goods are not used correctly or they're not used at all. I recommend using the cost of goods because it shows you a better picture as to what your real expenses are for the business compared to what are the expenses that you incur to create the product that you are selling. So in other words, the cost of goods sold is exactly the items that are used up to produce the materials that you are selling. If you are, working on a job site, the materials that you purchased at the lumber yard for this construction, that is a cost of goods because it is used up and left on the job site. It is not an expense. But let me just look through this section here. We have inventory adjustment, and then we have job expenses, which is the most common type of cost of goods where we have, it cost me money to rent equipment for the job. That is not necessarily an expense because that was for the specific job. Materials that you purchased for the job is another cost of goods. The permits and licenses that you needed to obtain to create the job is a form of cost of goods. The money that you gave to other contractors to come in and help you with this job is another cost of good. So those are just some of the examples. Again, you see that yours is going to look very different. You could have much more listing or a much smaller listing here of your chart of goods. But I wanted to point this out because when you look at your profit and loss and you take the full income and then you subtract the cost of goods, you will come up with the gross profit. Now, this is the amount that QuickBooks, in my example here, is saying that you actually made on these jobs because you brought in so much money and then you had to use money to purchase equipment or materials or subcontractors. So that's not really part of the profit. So you deduct that out of the total income and you come up with your gross profit. Now, this is not the bottom line of the profit and loss. This is just the bottom line of the income portion. All right. So we have your income and then we have everything that it costs you to produce the materials that you are selling. Now, underneath the gross profit here, we have the next section, which is all just expense categories. Now, the difference between expenses versus the cost of goods is it is not used or used up directly for the job. So, in other words, we have items such as automobile expenses and the fuel it costs to get there, bank charges, insurance and workers' comp insurances. We have expenses such as interest on your loans or utilities or rent. Those type of expenses are listed separately underneath the gross profit. So now we take the gross profit, it subtract out all of these different expenses that were not specifically used for the job. Okay, like, obviously your utilities. You cannot claim your utilities as a cost of goods. However, your utilities is an expense. Once we have done entering all of the expenses, then we will total the net, the total expenses. Okay, so your total expenses will be subtracted from your gross profit, and that will come down here to your net income. Now, your net income, if you see a negative amount here, obviously that means you had a net loss. You didn't make any money for this time period, you lost money. So it is very important that any transactions that are created throughout the month or the quarter are entered and reconciled before you try to run a profit and loss statement. To get the most understanding of the financial health of your business, I would suggest that first of all, you do a profit and loss report review on a frequent basis, whether it's monthly or quarterly. I wouldn't go beyond quarterly because then it's hard to see until if you wait till the end of the year, it's really too late to make any changes in your budget. Um, so go ahead and check on your profit and loss on a monthly or a quarterly basis. Now, in order to be able to see a little bit more, you can go into the QuickBooks um, Customize Reports tab and select that you want to see a prior year or a prior period. If you are not familiar with the QuickBooks software, check the link that I am listing below and follow to my course where I teach the basics of QuickBooks. I'm not going to get into all of that with you right now, but I will show you really quick how this would look. So if we change the settings, I'm going to change it to the date of this fiscal year, and I'm also going to change it to the previous period. Now, when I hit previous period, you'll see that QuickBooks will now list what your profit and loss statement looked like the year before. Now you can go down and compare and see if anything looks like a mistake, or perhaps you realize you're spending more money than you meant to on certain categories. So it is very helpful to compare with the prior years of your profit and loss. Thank you for watching. I hope this video helped you to be able to read and understand and interpret the profit and loss statement for your business. Go ahead and select subscribe to get more tips. And, every time I upload a new video on a little bit of teaching, you'll be notified. So I can just coach you along. So go ahead and hit subscribe or follow one of the links below to sign up for one of my courses. All right. And until then, I will see you next time.